Welcome to This Explainer. Today, we're diving straight into how a massive geopolitical shock over in the Middle East has literally triggered a global aviation crisis. We are talking about an absolute perfect storm here. Soaring fuel costs, entirely shifting business models, and fierce competition. It's a storm that's already claimed its first huge casualty, and honestly, it won't be the last. Okay, so here's our roadmap for This Explainer. First, the fall of Spirit. Second, the Hormuz fuel shock. Third, global airline vulnerabilities. Fourth, resilient budget carriers. And finally, the future of airfares. All right, let's jump right into part one, the fall of Spirit. 17,000. Let that sink in for a second. That staggering number represents the jobs lost literally overnight when Spirit Airlines ceased all operations and grounded its fleet of over 130 aircraft. We're talking 14,000 direct employees and thousands of contractors who just found themselves out of work as those iconic yellow and black jets were permanently parked. Now, it's absolutely crucial to understand that this didn't just happen in a vacuum. A $500 million federal bailout attempt actually fell through recently after creditors rejected the terms. But the truth is, Spirit was incredibly vulnerable way before the fuel shock delivered the fatal blow. Just like a lot of ultra-low-cost carriers in North America, they were getting squeezed hard. Bigger airlines were stealing their customers, and those massive Pratt & Whitney engine recalls, they forced Spirit to ground dozens of planes, completely crushing their revenue. But the final nail in the coffin? Jet fuel prices effectively doubling to $4.88 a gallon. Absolutely brutal. You might be sitting there thinking, well, I never fly Spirit anyway, so why does this matter to me? Well, here's the thing. Spirit served as what we call a pricing anchor. That means even if you avoided them like the plague, their mere existence kept your Delta and United tickets cheap. Seriously, when a budget carrier is flying a route, the big guys are basically forced to compete on price. So without that anchor holding things down, the entire market shifts. Which brings us to part two, the Hormuz fuel shock. Thousands of miles away from Spirit's headquarters, we can trace exactly what triggered this collapse. The severity of this crisis is just staggering. Jet fuel prices have essentially doubled because the Iran-US conflict effectively closed the Strait of Hormuz. We literally went from about $2.50 a gallon pre-war to nearly $5. And since fuel makes up about a quarter of an airline's total operating expenses, low-cost carriers, whose margins are razor-thin to begin with, simply cannot absorb a shock of this magnitude. Listen to this dire warning from the International Energy Agency. Europe could have as little as 6 weeks of jet fuel supply under worst-case scenarios. That proves this situation is escalating rapidly, forcing preemptive flight cuts. It's not just a matter of having to pay more for fuel anymore. It's a very real, very scary fear that the fuel simply won't be there at all. Airports are already warning of crunches, and some countries, like Slovenia, have actually had to introduce fuel rationing. We really need to differentiate between these two compounding issues, especially since 30% of Europe's jet fuel imports are tied directly to that blocked strait. So on one hand, you have the price crisis, which is tightening margins globally. But on the other hand, you have a literal physical supply crisis. Airlines aren't just paying more, they are actually starting to run out of jet fuel, especially over in Europe and Asia. Let's move on to part three, global airline vulnerabilities. Let's look at who else is at risk right now. When we look at the broader data, we start to see a pretty terrifying picture of global contagion. Over in Europe, Lufthansa is canceling 20,000 summer flights just to conserve 40,000 tons of fuel. Think about how many vacations that ruins. In Asia, Cathay Pacific has doubled its fuel surcharges, which adds roughly $100 to your average airfare. And back in North America, the vulnerability extends way beyond Spirit. A whole coalition of value airlines, including Frontier and Allegiant, are actively seeking a $2.5 billion liquidity pool from the government right now just to keep their heads above water. Other ultra-low-cost carriers are absolutely teetering on the brink. Industry leaders are loudly predicting that major European budget airlines might not even survive the winter. The CEO of Ryanair bluntly noted that 2 or 3 European airlines, specifically naming Wizz Air and Air Baltic, are highly vulnerable if oil stays at these inflated levels. And honestly, the dominoes are already falling across the Atlantic. Just look at these recent European casualties: Play Airlines in Iceland, Eastern Airways in the UK, and the leasing provider SmartLynx. Their bankruptcies prove that the entire ultra-low-cost model, which completely relies on cheap fuel and lean margins, is flat-out failing this global stress test. The old playbook of unbundling tickets and aggressive growth, well, it turns out that only works when fuel is cheap and abundant. But there is some hope. Let's look at Section 4, resilient budget carriers. Not every budget airline is facing the chopping block. What's really fascinating here is the stark contrast between the grounded planes of failed budget airlines and the financial data we're seeing from newcomers like Avalo and Breeze, who are actually genuinely turning profits right now. While Spirit was hemorrhaging over $1 billion, Breeze posted a 4% operating margin, and Avalo actually reported a net profit. So, what's their secret? The survivors are adapting by totally avoiding direct competition with the legacy carriers. Carriers like Breeze are focusing heavily on nonstop routes between smaller cities where the big legacy airlines just don't bother to fly. On the entirely other end of the spectrum, you have Ryanair in Europe. They survive through sheer brutal operational efficiency and massive economies of scale. They execute incredibly fast turnarounds and enforce strict cost controls like nobody else. And looking down at Latin America, we can see that bankruptcy isn't always a death sentence anyway. Take Azul Airlines, for example. They're demonstrating a clear, successful path to restructuring despite having really high leverage. They entered Chapter 11 with heavy debts, sure, but they broke operational records and actually have strong creditor support. It just goes to show that strong management can pilot an airline through even the absolute worst economic turbulence to emerge stronger by 2026. Let's wrap things up with Part 5, the future of airfares. So what does all this mean for your wallet? Well, without a pricing anchor in the market, the data shows that when an ultra-low-cost carrier leaves a route, you will instantly pay about 23% more for a ticket. That is a solid $60 jump per ticket. Now just multiply that across the thousands of routes Spirit used to fly, right as we head into peak travel season. Everyone is going to pay more, whether you're flying Delta, United, or American. And speaking of the big three, those major legacy airlines have successfully copied the budget model anyway. They introduced basic economy, those stripped-down, non-refundable tickets where you have to pay for your bags, competing directly with the budget carriers. United's basic economy hit 15% of their domestic sales last year. They've effectively squeezed the remaining budget carriers out of their own market by offering low prices, but with the massive backing of a global network. So, as we wrap up this explainer, I have to leave you with one final question. Is the era of ultra-cheap travel over forever? I mean, considering this devastating mix of expensive fuel, actual supply shortages out of the Middle East, and super aggressive legacy competition, has the golden age of the budget airline been grounded for good? The skies are changing incredibly fast, and how we fly and what we pay for it might never be the same again. Thanks so much for joining me today, and keep your eyes on the horizon.